So today we are going to solve May 2022 paper question number 2 part C. Explain the difference between fixed cost and the variable cost. So fixed cost we know, like the rent, the electricity bill, they are all examples of the fixed cost. It's a cost that does not change with the level of activity. Okay, the example you can give, example the rent. Okay, variable cost is a cost that will change directly in proportion to the level of activity or how much of activity you do, it is going to change. So for example, you can talk about electricity. Okay, electricity bill, or we can say cost of sales. Okay, we can say cost of sales or the purchases. As the inventory is bought, it is going to change with the level of production. Okay, so that is fixed cost and variable cost. Semi-fixed cost and semi-variable cost. Semi-fixed cost, they are going to remain constant over a range of activity, and the cost will again increase, and it can remain constant over the other range of activity. Okay, for example, we can talk about even some part of electricity bill can be judged in some countries like that. Okay, the cost is going to up to some 200 units, the cost is going to remain constant, and then after that it might become 300 per unit, like that. Then variable cost, it has two components, one is a fixed cost and a variable cost. So fixed cost will remain constant regardless of any activity, and the variable cost is going to increase in proportion directly with the level of activity. Now state one example from the site's cost of the for the following. So we can say fixed cost, example, the rent is fixed, and the variable cost you can calculate from the purchases. Okay, because purchases will have quantity times the price and the cost of sales. Okay, then semi fixed cost, this will have depreciation. Okay, the depreciation like 8% of something, okay, of the cost, the depreciation cost is going to be the semi fixed cost, and semi variable cost are going to be the general expenses. Then we have the prepare the forecast statement of profit and loss and other comprehensive income for the year ended 30th April 2023. So let's prepare this. They have given some adjustments. Okay, Syed is considering due to an increase in sales volume, revenue is going to be increased by 25%. So let's say the revenue initially was around 240,000. Now it's going to increase by 25 percentage. So 25 percentage of 240,000. So that should be equal to, so that is going to be equal to 300,000. Then due to bulk buying, the cost of all sale units will be 10% lower than the last year. So let's calculate that. Okay, so what happens is cost of sales is going to have the cost of sales, okay, is going to have some quantity and price, right? Cost of sales will have some quantity times price. Now the sales volume, the quantity has increased by 25%. So we have to even this here also, it would have increased by 25%. Okay, quantity has increased from by 25%. So it would have become one quantity plus 25% of quantity. And the price, how has the price affected? Price has become lowered. Okay, price would have got lowered by 10%. So 10% of price. Okay, this is from the previous whatever cost of sales we had. This was cost of sales 1. Okay, let's assume the new cost of sales is going to be COS2. Okay, after the new adjustments. So this is COS2. So Now I can write it as, okay, quantity plus this 25 percentage is nothing but 1.25 quantity. Okay, it would have become 1.25 times the quantity, and the price would have become zero point 0.9 times. It has got decreased, so it is 0.9 times the price. So this means, okay, so 1.25 times 0.9 times quantity times price, right? So quantity times price. We already know quantity times price is CO1. Okay, so that is equal to 1.25 times 0.9 times this quantity, and price was already, we had calculated the cost of sales. Cost of sales was around 90,000. Okay, 90,000. So let's write that. So cost of sales is 90,000. So the change in the cost of sales would have happened like this. So if you put, this is going to be equal to 101,250. Okay, so this is calculation, okay, working. So okay. So the cost of sales is less 101,250. Then let's calculate the gross profit. So gross profit is 300,000 minus 101,250. That will be equal to 198,750. Okay. And then we have expenses. Okay, let's calculate what has happened to depreciation. He says that annual depreciation will remain at 14,000 until revenue reaches to 80,000, when it will change, increase to 19,000. So revenue has already increased to 300,000. So let's write the depreciation charge as 19,000. Then general expenses including the bank loan interest. This is going to be charged as 30,000 plus 0.5 15 pence of revenue. So this is going to be equal to 30,000. Okay, 30,000 plus 0.15 times 240,000. So that value is going to be equal to, so 30,000 plus 0.15 times 240,000. So that's going to be equal to, so now the new revenue is 300,000. So not 240, so 300,000. So 300,000. So 30,000 plus 0.15 times of 300,000. That should be equal to 75,000. So we have the depreciation charge. The rent is the same, it is 25,000, and then this one, okay, this expenses is going to be equal to 75,000. So let's write that. So 75,000, and then we have the total expenses. So 19 plus 25 plus 75, it is going to be equal to 119,000. Now let's calculate the forecast profit for the year. The forecast profit for the year will be equal to 198,750 minus 119,000. So that will be equal to 79,750. Okay. Then we have Explain three ways in which Syed should consider social accounting in operating his business. So, in social accounting, you can mention he should consider employee welfare consideration if he takes environmental welfare considerations and sustainability consideration, then he is following social accounting. So, employee consideration, for example, if the employees are trained properly, that means that he can meet his business objective. If the production process is non-polluting, okay, for example the transport, okay, which limits emissions and it is staying within the legal limits, then he is following the environmental welfare consideration. Then sustainability consideration is use the resources mindfully so that it is available for future supply. So these are the social accounting considerations. Then evaluate the use of profitability ratios as the only way of judging the success of a business. Positive points will be if you are considering profitability ratios, it helps you to enable comparison. So I can make compare similar businesses, you can take business decisions, it will act as a yardstick, and also you can directly compare with the previous year investments. Okay, so it is a good way to use the profitability ratio in judging the success of a business, because profit is the main driver for a business. But however, you should consider other factors also, such as non-financial factors and social factors. Okay, you should consider like, and you should also consider liquidity and ethical factors. Okay, liquidity ratios as well. So should be considered when judging the business. So non-financial factors such as what is a product development, what is the employee skill, okay, and social factors such as environmental benefits, environmental considerations, workforce employee considerations, welfare considerations. So this is also should be considered, and liquidity ratios also should be considered so that we know how much of assets and liabilities are there in the business. You should also consider ethical considerations such as moral, okay, whether their business is morally correct, okay, and is doing the right and wrong things, okay, it is doing. So if you consider all that, that will also be helpful. So in conclusion, it should consider both profitability and other factors which have been mentioned to judge the performance of a